trend liquidities, equal highs and lows, previous day's highs, previous week's highs, previous month's high, or previous year's high. No matter which of these you use, or even if you use all of these things as your liquidity, I am here to tell you that that is not really what liquidity looks like. It is so amazing that these things work. Yes, they do work. But it is very important to understand that when you are talking about liquidity, if really that is your liquidity should lead to exactly the zone that you are to pick. Because in the first place, what is actually even the definition of zones? That is definition of imbalance. Your order blocks, your fair value gaps, supply and demand, or whatever it is that you use, you are picking them all because you are trying to pick imbalances. However, imbalances in the market are simply passive liquidities. Imbalances in the market are simply passive liquidities, which means that the liquidity that has really been rated before, such liquidity ought to reactivate to now become imbalanced. That is, if price engineers a liquidity and price rates that particular liquidity is meant to be your supply or your demand in the future. Is meant to be your exact imbalance area in the future. Yes, all these things are wonderful. Your trend liquidity, previous day high, stops resting above them, and all those major assumptions which are logical enough to give an edge if well done. But I'm here to show you exactly how to pick liquidities objectively and how your liquidity translates to the zone. Which means when you say that you're actually targeting a liquidity, the liquidity itself, the high or low that you are targeting as your liquidity, is meant to be the determinant of the exact imbalance zone that you are to mark. It is not meant to be a situation whereby you just pick a random liquidity and then you start going to a random time frame to pick a random order block because it is neat from that time frame, or to pick a random fair value gap from any time frame randomly. That is not what it's meant to be. I'm here to show you exactly how your liquidity has a nature based on the open of the day, open of the week, your session open, your monthly open, and your yearly open. All of these things are the major ones that has their own liquidity. That is, monthly time frame has its liquidity. There is even nothing like 1 hour liquidity in the first place. There is even nothing like 15 minutes liquidity. Spotting liquidity on 15 minutes in the first place is meant to actually be wrong. And I will also explain, before I go to the chart, to show you what I mean, I will also explain why all these things you see as liquidity, why they seem to work. It is very simple. The major thing there is that at every imbalance area, I said imbalance areas are simply passive liquidities. That is, liquidities they were active before, and now they are now passive. Those are your imbalance areas. So these your imbalance areas are actually areas of liquidities that have been violated before and now translating into an order block or supply and demand or the imbalance, generally imbalance that you mark that you initiate your trade. All right. So which means that if price engineers a liquidity and you are able to know that, okay, this particular type of liquidity is, say, weekly liquidity. What you are meant to go for is a weekly imbalance. That is, if it is a liquidity that is meant to lead you to buy, you are meant to go for a weekly imbalance, as you'll be able to identify after I'm done with this particular video, a weekly imbalance which has been formed before, which means areas where buyers took over from sellers, forming liquidity and therefore extending it further. But how do you exactly even know the time frame to mark its order block, to mark its area of interest, when you don't even know the type of liquidity you are dealing with? And like I said earlier, I will explain shortly why your trend liquidity, your previous day highs, why they seem to work. Your trend liquidity is your equal highs and or what makes price to rate them is because these particular areas, they are filled previous imbalances around the areas that they mitigated. Price touched an area, first time, second time, third time. Automatically, that means that price is filling the liquidity there. It is absorbing the liquidity there. Which liquidity are we talking about now? Your imbalance. What is imbalance? Passive liquidity. So price is touching those areas and it keeps eating up the liquidity. So automatically, when price revisits such area, price will raise it. Why? Because there is no more imbalance. There is likelihood of no more imbalance within that particular range. That is exactly what happened. That is why this seems to work. But to objectively understand mitigation, why will price even revisit an area and still use it in the first place? That's because there are different imbalances. When price first mitigated it, it might be for the purpose of mitigating a weekly imbalance. And such particular area, when price come back to it, it might be for the purpose of mitigating a daily imbalance. So this is why price has to touch your areas at times 1, 2, 3, or even 5 times or even more at times. That's because there are different imbalances within such particular areas, and price is coming to visit them. We could be weekly imbalance, daily imbalance to target daily liquidity. That is how it is meant to be. You are meant to use a daily imbalance to target a daily liquidity, not a random imbalance to target a random liquidity you don't know its nature. All right. So without further ado, I will go into the charts now and I will show you everything I want to show you. And I will leave you guys to actually decide on what to do with whichever information I will be giving out to you. And also make sure that you subscribe and make sure you watch the free 2024 mentorship playlist if you haven't seen it. That is, if you are new to my channel or by any way you haven't seen it. And of course, I will see you guys later. Let us go into the charts. All right, guys, welcome to the chat. And I'll be using this particular example. Why? Because I gave it live on my Twitter page, as you can see, and I pinned it for like over a month until it delivered to the final targets. All right, so that is why I will literally be using this particular one. And if you are new to my channel, you might not be able to relate. Well, I will advise you study the free 2024 mentorship playlist. As when you receive this video, maybe I might have changed it to 2025 or whatever, or just leave it at 2024. So watch all the videos there to get started. But I'm very sure you'll be able to still digest this particular video. You'll be able to understand this particular video because I will just be using terminologies, buyers and sellers majorly, because there are ways you can get to know your buyers, to know your sellers. So basically, I will be using buyers and sellers so that you will be able to logically follow through and see what I'm saying as true or not. All right. So, but I will start with my claim. So, for example, look at this particular trend line liquidity. The question you want to ask yourself, even after price broke through the trend line and gave a break of structure, one will probably be buying here, thinking, yeah, all this trend line will now be rated even to the external and up. But we can see that didn't happen quite immediately. In fact, we have more sales to the downside for price seeking balance. All right. So that is majorly why you have to understand what I'm talking about. You'll see many cases where we have equal highs, equal lows, and probably not ready to immediately. In fact, it might be the beginning of major trends, trend line liquidity and whatnot. So why those things seem to work is majorly because imbalances. That, for example, I can tell you categorically here that this particular move here, there is still a daily imbalance right here, which I will show you guys as well shortly. A daily imbalance, a other price could come here and still use it. Even though if you are just looking at it with the normal way of things, you will believe all mitigations have happened. And here we are having price come here because there is still a very fresh daily imbalance that has not been used for whatever purpose is meant to be used. What's a daily imbalance meant to be used for? It is meant to be used to sponsor a daily liquidity. You will spot a daily liquidity here as well, somewhere around them, which I will show you. Weekly imbalance to sponsor price towards a weekly liquidity. That is the order of things. That is what can make you objectively seek things, because in the real sense, previous liquidity area that is now passive, it was form an imbalance. That is the simple effect. You can do your research, ask your ChatGPT, wherever research you want to do, that imbalances passive liquidity. That's what they simply are. Feeling of imbalance simply means price is trying to absorb liquidity from the passive liquidity, all right, stepped in to stop the effect and to reverse price. That is imbalance, all right? And FVG and all, yes, there are imbalances, but there are types of imbalances, not even major types of imbalance. Even other blocks are imbalanced. Even supply and demand areas are imbalances. Sponsored candle, FU candle, whichever branded name that you give to them. The real sense is to understand what does imbalance look like based on the normal language, based on the normal definition of what imbalance is, okay? So practically here, I've always said in some of my videos that when you have buyer here, seller here, this I is liquidity. When you have seller here, buyer here, this I is liquidity. When you have seller and seller here, it is not liquidity. When you have buyer and buyer here, that high is not liquidity. That is like the simplest way I can easily define liquidity practically to you guys. Now, back to what our discussion is all about. Now, we're much more interested first in this. So the first thing to do is this particular high, what's the most premium liquidity around this range? Now, this guy right here is a daily liquidity, this one here. And in fact, this buy was taken here from exactly a daily imbalance zone somewhere around there, a daily imbalance zone somewhere around there to sponsor even that move to take a daily liquidity. And all these things are what I'm interested in showing you. Now, I will activate my in-house built indicator, which is based on everything I have taught so far on this channel. All right, how to get the signals, what they are registering. So this is just a way putting it into programming language. And don't even bother yourself, this indicator is not for the public, so don't even try to text me and all. So I've applied the indicator. Like I said, you shouldn't text me. This is basically in-house built indicator. Everything that's brings about this, you can already see it, or you can read it clearly yourself by manual configuration of the things that I have taught you. All right. So like I was saying, I told you guys this I here was daily liquidity, as you can see. So you can see that D magnet. All right. D magnet showing me it is daily liquidity. And when I put the highlight on it, the aggressor that is what reached this low is seller in nature. All right. Why the low itself, that is the origin, is buyer in nature. If I bring it to it, is buyer in nature. All right. So that is this high, the first pullback that happened there. But that's not our major concentration. My major concentration is this. Now, this particular high is not liquidity. Please note that that high is not liquidity. All right. But however, liquidity is what forms zone. I told you passive liquidity is zone. So there was liquidity here initially. If you see this area here, there was liquidity around this initially. And when we check the details, you will see that the origin there was buyer and what rates it was seller. So seller rates buyer. That is supply. That is, when such liquidity is rated, that forms supply. All right. So that is seller's imbalance or buyer's exhaustion imbalance. Buyers got exhausted and sellers took over from them. So passive liquidity. So this liquidity here is passive. It is passive. All right. So, and that is why you can sponsor. I told you guys this low is daily liquidity, as you can see. It is active. It is right at the right side of the market. The low itself is active and it wasn't rated yet. So that could have given us, and that was like the most discounted liquidity. That was like the most discounted liquidity here that gives us the clue of exact area to mark. Okay. Of exact area to mark before we target the external liquidity. So that's like the most discounted liquidity. If you missed my video on premium and discount liquidity, that was the last video I released before this video. It will be linked somewhere in the description as well. so that you can understand better. And that will also make you understand why this high was not rated immediately. Why, even though this is daily liquidity and this high too, based on opposition rule or confirmation of signal on another time frame confirmation, this high too was daily liquidity. So why would price read this first and will still sell first? So why didn't we target all day liquidity yet with the first imbalance zone? That's because the highs here are the most premium. All right, they are the most premium liquidity, that is, they are the defend of the sell trend. In as much the sell trend is not ready to reverse totally, the most premium liquidities cannot be rated. I explained that extensively in the last video I released here about premium and discount. All right. So, but the less premium liquidities in nature, which is daily liquidity here now, can be rated first as a pullback. And then we can now have more sell then before price reach, because before this can be rated, price has to touch what we call MIZ zone. And as I hear, price has not gotten to our momentum imbalance zone. All right. And what makes price to get to it is until here that price has gotten to momentum imbalance, because momentum imbalance is what can continue a trend. For every trend continuation, for buy to continue, what engineers such reversal is the most premium liquidity. That's what engineers such reversal. So what engineers such reversal is the most premium liquidity. Okay, that's what engineers such reversal. And which means for buys to continue, all these sell trends will reverse. So for every continuation, there is a reversal of the pullback trend. All right. So it is until here that price gets to momentum balance zone somewhere around there, to somewhere around this straight line here, and then we can now mark the daily exhaustion imbalance zone that will sponsor that move. That is daily IZ now. For within an MIZ, it must be nested within. So like I said, the video will also be linked in the description below. That particular video is also very important. I explain premium discount liquidity extensively there. So relatively, let's check which imbalance zone price used here. It must have been where buyers rate sellers. All right, daily wise, where buyers rate sellers. So let's check that. Let's check that. All right. So you can see here. What do we have here? We have okay, this on this time frame it is not conclusive because we have, I think, W plus, I think we have D plus and D plus. It's not conclusive based on opposition rule, which I would still teach later. It is not conclusive, but you can see a passive. There is passive liquidity here, but the cross is not meant to be seller. The cross is meant to be buyer, so it's not conclusive. There was a passive liquidity and it has been rated. That's why it is passive. It has been rated. This low has been rated by this week right here. Okay, so let me go to another time frame so that we can see where we have much detail about that. Okay, so where we have conclusive signal, D plus D minus, not this. It's not conclusive, it's still W plus at the, so this, I can't go with this signal. I can't remember, maybe it's 1 minute or thereabout, but it was conclusive on a certain time frame, because your time frame has to conclude. Okay, perfect. Yes, I think this is it. This is it. So this is where we have it. So previous day D plus, as you can see, that is buyer, D plus represent buyer. So new day starts with seller. Opposition rule states that your new day signal or new week signal must oppose first the previous day or previous week signal or previous month signal for you to register the signal on such time frame. So on a certain time frame you are checking, that is what must happen. I hope that makes sense. All right, so that is exactly what happened here. So we have D plus and so we have minus. So price cleared the low, cleared the high, made the target, then it flipped to buyer. All right, so that's place where we have buyer's flip. Okay, so that's basically our imbalance zone, so I can even refine it. So because it's meant to start from where we have this flip. So we have sellers taking over first, then buyer took over from them. So as you can see, the liquidity was formed there initially, which was origin seller, that is the passive seller, cross signal buyer. So that is your exhaustion imbalance zone, making this particular low to be passive liquidity. Okay. And all the liquidity here, you can see them, they have been rated by this week. And the low of this week itself, this week right there, the low of that week itself is not liquidity. So the week has rated all the initially engineered liquidity. Such liquidities, they have now been rated by this particular guy right here. So they are now passive. So that is the meaning of passive liquidity, which means imbalance. So that is your daily buyer's imbalance in quotes. All right. So that's pretty much it. So we are able to use that area, which is already nested within our MIZ. Okay, which was already nested within our MIZ. As you can see, it's perfectly used for the continuation of the words of the buys. All right, for the continuation of the buys right here to this and then to the external liquidity. So that's pretty much it. With this, you are able to understand that even if it is weekly to weekly, weekly imbalance will sponsor weekly liquidity. You can identify weekly liquidity. You can identify, monthly liquidity. You can identify yearly liquidity, even sessional liquidity. So you know the nature of each liquidity that was formed. You know truly if that low or high is truly liquidity or not in the first place, right? You can see here how this was liquidity. This low right here was liquidity and then rated before this buy. So you would know exact liquidity areas by nature of being able to study your participants. Equal lows, equal highs, they tend to be rated all because there is no imbalance within them again, because they have filled up the passive liquidity, which they mitigated multiple times. So that is why, for example, this mitigated this mitigated that same area, this mitigated. So relatively, most likely all imbalances that can sponsor any liquidity engineered by sales here would have been mitigated. That's why it cannot become a trend line supposed liquidity. But when we now want to pick zones, when we now want to relate liquidities to zones, objectively, that will not be ideal. Objectively, that will not really so much work out effectively, because we should be able to map the liquidity, the nature, is it weekly, is it daily? And then we should be able to map it out directly or link it directly to the passive imbalance of the same nature of that liquidity, that is weekly liquidity to be linked to a weekly imbalance, daily liquidity to be linked to a daily imbalance, and so on and so forth. So that's pretty much what I have for you guys in this video. Stick around, ensure you subscribe, like, and yes, let's go to the conclusion of the video. All right, guys, I know that you are now blown away by what I have shown you. And I believe that if you are logical enough and you do your research, you will get to understand that this is the right perspective of becoming more objective in charts. And this is how you can actually tend to understand liquidity and imbalances better. All right, so let me know in the comments what you guys would love to learn in the next class. Let me know if you guys will want me to actually go into much details about this, if you guys want to learn more about this. And of course, as usual, I'll see you guys on the profitable side.